All right, today we're going to talk HUSA really quick. One that I really didn't feel like I traded all that well, but I had a solid plan, some good thinking behind the trade, so I figured we should dive into that a little bit. Um, it shows 38.70 realized on this, but really it's probably more like 3,500 after commissions because I was pretty bad about adding liquidity. I was taking liquidity a lot on this. I was kind of making a few emotional decisions, a lot of buying on the ask, selling on the bid. So I wasn't too pleased with myself there. But HUSA, let's just talk about what it was. Pre-market, I saw it gapping up about 40%. It closed at 50 cents yesterday. It was opening up here in the 69-cent area. And one of the first things I look at when I see a big percentage gap up to kind of figure out if I want to attack it short right away or not, or maybe even long, is I start going through the filings. I'm looking for obvious ways they could dump shares and dilute, aside from the long-term chart history as well. But that really plays into my mindset. And in this case, just recently, I mean, all you got to do is go look at the filings, and you'd see in the last couple of weeks they did a $5 million ATM deal, which ATM means at the market offering. So they can dump up to $5 million worth of stock anytime, anywhere. And a lot of times you see companies take advantage of this when there is a positive press release, big gap up, increased volume, buyers to sell into. And also in the case of HUSA, there are times where a company may have an ATM out there and you see it run anyway. But then there are other times where I think it's a little more likely you might see some selling, like HUSA, where they only have a few $100,000 in cash on their last quarterly report. So they pretty badly need money. So whenever I see that, it's an immediate short target for me. And even if I can't find shares to short or don't want to short for some reason, I'm sure as hell not buying in that situation. So HUSA, I knew right away I wanted to short it. Pre-market, I was shorting. I took 20,000 shares at 69 just as a little starter. I was hoping there'd be more of a morning spike than this for me to add into. And I did add a bit into this morning spike right here. I didn't time it too great. I wound up with maybe like a 50,000 shares at a 71-cent average or something like that. And I wasn't too happy with the size I got. I wasn't too happy with my average. And it had this quick snap back under VWAP, hit a new low of day after the market open. When I say new low of day, I don't really count pre-market, what it was doing there. And it was just kind of consolidating and being choppy. And in a lot of cases, what I see with these, where there's an ATM and the company needs money, is you tend to see an all-day fade a lot of the time. Now, in this case, we had a guru alert the stock right here at about 9.50. And you can see we had a nice surge of volume here. All the little sheepy chased it up. People still are doing that despite numerous warnings. And surprise, surprise, it's stuffed. And I did add into this spike. I got up to 90,000 shares. My average was just over 70 cents. Now, unfortunately, the first mistake I made on this is I kind of spooked myself. 90,000 shares risking off a high a day, a little over 70 cents. There's my 5K risk. That's right where I want to be at. But I was being a little conservative. I didn't really want to have to maybe take a loss if things went wrong. And when the guru put his sell alert out, which I think was right around here, the stock did not react negatively at all. There was really no selling pressure, which I've seen times in the past with guru alerts where the guru sells and the stock doesn't really drop, and then all of a sudden, new high a day. Like things can squeeze in a hurry, because I'm not the only person who has the idea of short when a bunch of sheep are chasing. So I was kind of cautious here and a little skittish, and I was thinking, 90,000 shares, that might be tough to get out of. So I covered about 40,000 of the shares right at break even, or tiny, tiny gains. I hit an offer. I bought on the ask right around 70 cents, maybe 70 and a half. And then within 5 minutes, it was fading off again. So I was a little bit scared it might perk. It never did perk. And unfortunately for me, I lost a good chunk of my size right around break even. Now, like I said earlier, a lot of times what you will see with this kind of pattern, with a stock with the ATM out there that needs money, is an all-day fade. So we had this nice fade off for the next hour or so, down into the 57-cent area. And I just kind of put myself in the patience mindset. I was not looking to cover any into the weakness here. I was really trying to wait till more towards end of day to cover up. And, it rebounded a little stronger than I anticipated. and turned in the 60s all afternoon. So I wound up taking off most of the rest of my shares. Again, just dumb, smacking the offer. There wasn't a lot of liquidity, so I just kind of tried to take offers when I saw them. And I was out the rest in probably the 63.5 area. So I really wasn't too happy with that last batch of covers, although, that I can live with a little more because I had a plan, I stuck to it, and more times than not, that plan is going to work out in my favor. So it all added up to profits. That's great, but, kind of feel like what could have been on this trade. It could have been a lot better than it turned out to be. I traded it far from perfectly. But there was still more than enough opportunity here to walk away with a profit. So at least there's that. I mean, there you go. Another setup I tend to look for in the morning. Something I would never ever buy and almost always short sell. And once again, guru alert. So please, like everyone who watches this video, stop following people. Just stop, please. Thanks, guys.